Hello, my friends. I am today with Kevin Sherber with GFL Capital Mortgage, and he's answering all of our questions about mortgage. Okay, first question for Kevin. So how can people qualify for the mortgage?
Well, basically there's three steps. There's income, credit, and then assets for a down payment. Those are the basic three steps on a mortgage qualification.
What are the different type of mortgages?
Well, you have conventional Fannie Mae and Freddie Mac, and then you have government loans like VA and FHA that help people qualify with a little less credit, little less down payment. And you have your non-QM product or non-prime products that if they don't fit in those government or conventional buckets, that you can still get financing.
Could you tell us about condo financing?
Condo financing has an extra step. It's an extra layer. You not only have to have your credit and your income and your assets for a down payment, but the condo association also has to qualify for either Fannie Mae, Freddie Mac conventional or FHA and VA guidelines. If it doesn't, that makes it a non-warrantable condo, meaning they don't qualify for traditional financing. And there are programs out there for that as well.
So we know that there are several types of condo financing. Could you give us more clarity today so everybody will know today what is really condo financing?
Well, you have your typical condo financing where it does qualify for Fannie Mae, Freddie Mac conventional or FHA, VA. Based off of its, we'll do a condo cert to make sure that it meets their guidelines. If it doesn't, you have your secondary option, which would be a non-QM lender that does non-qualified condos. And then the third option for special cases, especially here in the Valley, would be your condo hotel financing. Those are all going to be not Fannie Mae or Freddie Mac or VA or FHA approvable, but there is condo hotel financing out there.
Would you tell us a little bit more about creative financing for investors? Because as we know, we have a lot of questions from investors and self-employed people that cannot qualify for traditional mortgage products, but they do know something out there works for them and someone out there can qualify them.
Yeah, so with the self-employed, typically the issue that people run into is they do a lot of write-offs. You know, they want to make sure they're minimizing their tax liability, writing off all their expenses. Well, that reduces your income on a traditional qualified loan, like a regular, Fannie Mae, Freddie Mac conventional or VA or FHA loan. But there is other options available where we can use actually 12 to 24 month bank statements for self-employed to show their deposits as income. And that doesn't show the write-offs. And so that'll show their gross income versus their net income on the tax return. So that's basically, I would say, our best product for self-employed people that are having trouble qualifying. And for investors, there's a couple different options for investors. People that have multiple properties, they're going to be renting these properties, and the rent can be used as income either on a conventional loan based off of a market estimate of rent, or in a case where they're buying multiple investment properties and they don't want to show their income or assets, they can use a DSCR program. And what that does is it bases their qualification based off just the rent, not their income at all. And as long as that offsets that mortgage payment, you're in good shape.
And how can we help regular people to understand it better and to make it easier for them?
Well, the best thing to do if you didn't understand the explanations of these products is to give me a call. We can take a look at your scenario and see what bucket you're going to fit in, whether it's conventional, FHA, VA, or maybe you need one of those special products, those bank statement products or DSCR programs.
And your phone number?
702-832-5704.
Could you tell us today a little bit more on the time frame? How much time does it take in our today's time and pace and reality to get approved for residential loan and for a condo?
Well, there's obviously times are going to vary based off of the client, the loan program, and every scenario is different. However, best case scenario, 20% down product conventionally, that can be done within 21 business days typically. Sometimes even 14, depending on if you need an appraisal or not. So, if you're looking at a condo, I would say that's more close to the 21 to 30 day close. At GFL Capital, we try and keep all of our closings to 21. But sometimes if you have a special product or non-QM program, it's going to take a little longer. So we typically will get that done in 30.
And this is it for today. It was Yelena Horton with Las Vegas Sotheby's International Realty.
And Kevin Sherba with GFL Capital Mortgage of Henderson.
Make sure to give us a call or write us an email or text us if you have any other questions or if there's anything else you would like for us to make a video about. Thanks for tuning in. To stay updated with our real estate advice, strategies, investor tips, and property tours, be sure to subscribe and hit that bell for notifications. It's the best way to ensure you're always in the know.